Good afternoon. Welcome to my practical presentation on the 4-hour chart. Now, the 4-hour chart is the most powerful chart and the easiest chart to use for understanding and pegging a daily range. Now, if you don't understand what I said, that means that any type of trading that happens inside of a daily range, it not only benefits tremendously, but it's made so much better on a 4-hour chart. So, before we get into it, I'd like to tell you where I'm gonna make you very happy with this. It, that is a very bold claim to back up, and I fully intend to do that with the points that are inside of this presentation. It's basically an exhaustive presentation on the most powerful, practical things that you can do with a 4-hour chart. Very strong bang for your buck. It's very worthwhile to stick around. So before I get into that, let's talk about some housekeeping. Let's talk about some housekeeping, shall we? So my market reviews. My market reviews are dated. They have dates on them. People, when they look at that, they think that that means that they're no longer relevant, that they don't have any value at all anymore. That's not the case. That's not the case. So for a lot of people, I know that when they do their market reviews, they just kind of point out some things in the charts, and then they don't even point out things in the charts. They just kind of point out some things that happened, and then they say, hey, oh, look, that happened. And they say, hey, oh, look, we made a lot of money here. That was awesome, right? And then they go. Like, not a lot of rewatch value. I don't like that. I really don't like that. So basically what I try to do with my market reviews is I try to follow specific logic, specific types of logic. So I show you techniques that I personally use all the time, and that have been around for like 10 years. They're like 10 years old. I learned them like 5 years ago. So if if you think that just the date on those market reviews makes them dated, the techniques are definitely dated. But the dates, they really do help you in two ways. They help me catalog them, and basically what you can do is you can go into them, you can see, you can learn the techniques that are inside of them. And if you're wondering whether or not they work, you can look at the very next day. They're not scripted. I just do I do what I do. I make some predictions based on it, and then you can go to the next video. You can see if the prediction played out in real time. So that's really the value in it. So that's what those days do. So without further ado, let us get into these rules of thumb, which are the bread and butter of what we're going to be talking about on the 4-hour chart. Okay. So with the daily range, every daily range can be expected to anchor on the 4-hour chart. An uptrending day will sink its low into a 4-hour PD array before spooling its trend. A downtrending day will sink its high into a 4-hour PD array before spooling its trend. A consolidation day will be bound by 4-hour PD arrays. Either the consolidation day will utilize one above and one below as caps to its daily range, or it will be captured by one single PD array and range inside of it. Okay. Let me show you some examples. I know that's a little bit confusing. So first one, we're going to use gold. You see some time principles intraday, but I'm not really interested in those right now. We can see that it digs down into this 4-hour fair value gap on the 15-minute chart, and then once it does that, it kind of leaves it, and then it's off to the races. It prints its bullish market. Okay, so the 4-hour PD array underneath it provided support for the whole daily range. Here we can see a downtrend in the Dixie, the DXY, the dollar index. We dug up during New York session. I'm sorry, that was a terrible way to say that. During the New York session, we dug up into a bullish order block, and then we dropped from there, right? So the bullish order block provided support. No, the bullish order block provided resistance from which the chart developed and and produced its downtrend, okay? So here we have Bitcoin. We have a 4-hour fair value gap to the downside, and we have a 4-hour order block to the upside. The fair value gap provided support, and the order block provided resistance, okay? That is a bearish order block and a fair value gap. Right? Next, we have a fair value gap. Now, this one's a little bit interesting. A lot of people think, hey, you're fudging it. Not the case. This is the S&P 500. The S&P 500 starts at 0930. So that's why I delineated it right there. We can see that during the ETH hours, during Globex, we drifted down into where we were going to be doing our range. So what we see depicted here is we see a fair value gap and the market range inside of it. So as you can see, take a look at those wicks, see how they wicked outside of it. Excuse me. So see how they wicked outside of it? This particular one is a little bit unstable. It's a little bit inaccurate at times. The PDs usually have trouble containing them, but they ultimately do contain them. So that's the other type of consolidation. So now we talked about the 4 behaviors that a daily range can have in response to the 4-hour chart, basically. So now we're going to talk about how we derive which PD arrays that we're going to use, right? So I just kind of picked, well, so far it looks like I just kind of picked ones that look very good in hindsight. However, there is a methodology that lets you pick them ahead of time. So here is what we're going through now. So the rules of thumb on the weekly range. So every weekly range contains a power of 3, which is seen on a 4-hour chart. What does that mean? That means that there's going to be a manipulation, there's going to be a Judas swing, and it's going to be, and the true trend is going to come from that. So an uptrending week will sink its low underneath the weekly open before trending. Okay. So the Judas swing is going to dig under the low. No, I'm sorry. The Judas swing is going to dig under the weekly open. A downtrending week will sink its high above the weekly open before trending. So the Judas swing goes above the weekly open during a downtrending day. Well, a downtrending week. These weekly profiles, they produce trending days. So a consolidation week prints multiple power 3 ideas that center around their weekly open. So it just bounces up and down between either it bounces off the weekly open a whole lot, or it goes up and down through the weekly open all the time. So as the weekly profile progresses, the PD arrays on the 4-hour chart are chosen based on the activities that the weekly range has done. Okay. So we're going to see some examples. We're going to look at some weekly ranges. So this is the NASDAQ on the 4-hour chart. The white lines are our weekly opens. As you can see during the downtrending days, we dig above the weekly open, and then we start downtrending from there. During the uptrending days, we dig below the weekly open, and we start trending from there. Okay. So once the trend is in progress, we can start thinking about those short-term 4-hour PD arrays. But before the trend really kicks off, it's going to be that liquidity sweep that really produces the order block, and then it's going to spool out. It's going to print fair value gaps. It's going to print short-term order blocks. It's going to print all of those things that you really expect out of ICT that look very nice to when people trade them, that are well, basically the trend spools out, and then you can pick your PD arrays based on that. So let's see. I do believe I have more notes on this. But really, the daily range rules of thumb, they're really brought to life. They really work based on this weekly range rule of thumb. And this weekly range rules of thumb, they're brought to life um, by the analytical ideas just presented throughout the channel. So um, if you'd like to get even more accurate than this, this is really all you need. This is man. If you're working within a daily range, this is basically it. You don't really need anything else other than this weekly range, and then from that weekly range, you can really pick out the daily range with incredible accuracy. So, looking at that, you can see all the order blocks. You can see all the important ones, all the long-term ones, all the short-term ones, all the ones that spool out. You can see where the fair value gaps, they do the institutional order flow entry drills, which happen after the Juju swing, by the way. Keep that in mind. So, so that's about it. That's the rule of thumb for the weekly. So basically, as a quick recap, the daily, they use the 4-hour PDs as the upper and lower limits, and the weekly shows you how the week is progressing. They show you the power of 3 on the I apologize. So the 4-hour PD arrays, they do the upper and lower limits, and the weekly profiles, which are developed with the Juju swing and everything, they show you which ones to trust. Okay. And if you can combine the two, if you get used to the two, if you start looking for these in your charts, and you start marking them out in your charts, you're really gonna get the hang of it. You're gonna start to understand it, and it's going to be probably the simplest tool and the most powerful tool that you have in your belt, and it's incredible. Okay, so I'll go into the theory of why this works and how we can modify it to really make it extremely powerful, extremely accurate. But for now, this is really all you need, and well, basically that's really all you need. So now modifications, simple modifications, simple modifications. So if the 4-hour chart is unreadable for whatever reason, a 3-hour or a 5-hour chart can be used in its place. So a daily range, I'm sorry, I'm getting ahead of myself. So why is this the case? Because what the 4-hour chart is really attempting to do is it's attempting to put the session kill zones from the ICT into an open, high, low, and close. So it takes a whole kill zone and it puts it into one candle. That's what the 4-hour chart does. That's its purpose. That's its thing. But it doesn't do it perfectly. It's just the fastest, the easiest shorthand that you can do to get that information or get that type of information. The 3-hour chart and the 5-hour chart, they also have that information, that same information that you get on the 4-hour chart. You don't really want to go above or below that because then you're starting to kind of melt the kill zones together, and you're starting to do you're starting to work with ranges that are either too high of a resolution to deal with, or are too in the weeds, too low of a resolution to really understand what's going on, and take your ballpark measurements that you need. So right before we refine, we need our ballpark measurement. And if we put too much data on our chart at the same time, using like a 2-hour chart or a 1-hour chart, we're not going to have that ballpark, right? So that's really what the 4-hour is doing for us. It's giving us a ballpark from which we can really squeeze down our accuracy. And just already that ballpark the 4-hour has, it's already very strong, very powerful. Anyway, If a 4-hour chart is unreadable for whatever reason, a 3-hour or a 5-hour can be used in its place. So what does that mean? It can have an unreasonably large range, or it can have ambiguous PD arrays, or it can have no PD arrays at all. By increasing or decreasing the time frame, just by a little bit, not a ton. Keep it within tolerance, between 3-hour and 5-hour. If we can do that, we can really clarify the chart and we can find the PD arrays that we're looking for. Let me show you an example. Here, this is a 4-hour chart. Between those two lines, between the separators, is a daily range. So when you look at it, do you really see, to the left, do you see a whole lot? Do you see anything that you can work with on that 4-hour chart? Not so much. I see maybe a fair value gap, but that fair value gap is giant. It's just massive. And everything else is just kind of mush, right? Agreed? Everything else just kind of looks like mush. So let's analyze it on a 3-hour chart. This is our 3-hour chart. So immediately, the first thing that you notice is now we have an order block. When we look at the 4-hour chart, compare it, we see that that down candle oh, excuse me. So that down candle is kind of sort of okay, but it has that giant wick. It has a very small range. It's not a very strong indication of what an order block should be indicating. So if we go forward, we look at the 3-hour chart. Now we can see that order block with fairly clearly. It's a large bottle. It's a large body candle. It has no wick. It's been left to the downside. That's an order block, right? What else do we see? We see a fair value gap. Now, this price didn't quite return to it. Sometimes it won't. When we go into the weeds and we talk about the actual measurement that these charts are approximating, you will see that it did. It did, in fact, 100% do what it was supposed to do. It reached the level. It was great, perfect, fantastic. But that takes a whole lot of work. That takes a whole lot of understanding that you're not really ready for right now. Trust me, believe me. Unless you're very, very proficient with these, and unless you're very interested in getting into the actual theory of it, you're not ready for it. So, anyways, back to the 3-hour chart. See that now we have an order block premium and we have a fair value gap discount. Very, very nice. And you'll notice that the very next daily range, if you'll take a look, you'll see that there's a whole lot of nothing on this 4-hour chart, right? But if we take a look at that 3-hour, you can see that an order block developed, okay? And this was even a proper order block with a fair value gap and everything right next to it. So so we can see that that was returned to on the very next day, and that actually acted as a discount even. So so yeah. We can also take a look at what the 5-hour chart did. 5-hour, very similar refinement. We can see that if we stepped up, we also have that same fair value gap. It's a smaller range, and we also have that a very similar order block. Notice I ignored the wick. We can get into the rules of when to ignore the wick, when to take the wick. Short answer, short form is we had no fair value gap next to the candle, so we did not take the wick. I know that sounds like a cop-out, but we'll get into it when we look at the charts, or when we do charts live. We will get into that. However, for now, just know that just because there is no fair value gap, we do not take the wick. But we can see how that daily range that we had in question, this one, it works on the 5-hour chart as well. So so yeah, it's also the same daily range. Was that really all? So for a quick recap, we'll go ahead and look at the slides one more time. So for a quick recap, we have our daily rules of thumb right here, right? A bullish day is bracketed to the downside by the 4-hour chart. A bearish day is bracketed to the upside by a 4-hour chart. A consolidation day is bracketed on both sides by a 4-hour chart. How are those chosen? Those are chosen by the weekly range rule of thumb, which if you look at the ICT Went series, the what every new trader or what every new and aspiring forex trader needs to know, that series, you'll find great examples of this, and in fact that's really the bread and butter of that series. Where was I going with that? I was plugging it. That's what I was doing. So go watch that. Go take a look at it. Go see it. Very important, very powerful. These rules of thumb for the weekly range are really how you're going to see the weekly range develop, and they're how you're going to pick out the PD arrays for the daily range. So now if you don't see PD arrays, and if you don't know how to use the 4-hour chart that you get in front of your face, you can modify it by using the 3-hour or the 5-hour chart, and PD arrays that show up on those, they're going to give you a 4-hour read as well. So they're very powerful tools for refining this particular chart. So I believe that's everything. Thank you for your time. I hope you had a good time. I hope you learned a lot. I hope you got a whole lot of value out of this. And I hope you take a look at the rest of my market reviews. I do tend to ramble a lot. However, if you just like fast forward and like go hop around until you see something interesting that you like, they're good. They're good. They're very informative. They're very nice. I wander a lot. However, I try to make even my wandering worth your time to listen to and watch. So, do I have notes for the end titles? I have notes for the next one. I have extensive notes for the next one. So anyway, thank you for watching. I hope you got a lot out of this. I hope you got a lot to go into your charts and see and look at and practice, and hopefully gain actual practical value out of. And until next time, probably next week when I release the full little treat sheet that I have for the theory on the 4-hour chart. Well, that will be next week. Hope you had a fantastic Thanksgiving, by the way. Mine was pretty good. I hope that if you were dreading Thanksgiving, if you didn't like it, if you didn't have a lot of family, maybe you had to spend Thanksgiving away. I hope you really did volunteer, like I told you, like I straight up told you in the last video, like I advised you with my life advice. So if you didn't, do it for Christmas. That is life advice. I am giving that, and I will co-sign that one. But anyway, thank you for your time, and goodbye.